Well, we are back on the sidelines again. You know, I'm surprised I actually found a seat here because surveys in recent years have shown an increasing percentage of people sideline sitting, waiting for mortgage rates to come down so they can afford to buy a home. Well, some of them might be drawn in now by Texas-based Frost Bank, which got out of mortgages in the year 2000 and also sat on the sidelines for more than 2 decades. But now they're back in the mortgage game.
Your home is your largest investment, and we knew it was the time to come back in and help our folks out.
One little problem, though.
We told people for 20 years we don't do mortgage.
After so much time, they had to figure out a way to bring borrowers back. Here's a way. They boast that compared to their competitors' mortgage rates, theirs is typically 1/8 to 1/4% lower. Using a recent average Texas home price and a recent average mortgage rate, shaving off just 1/8% drops the monthly payment by about $27 and saves you almost $10,000 in interest over 30 years. Knocking off 1/4% would lower the monthly payment by more than $50 per month and would reduce total interest paid by about $19,000.
We're really trying to get people to experience Frost, and so we've taken the approach that we want to be very competitive.
Here is more of that competitiveness. As home prices in Texas have soared, the 20% you would normally have to offer in a down payment has gone way up too. And of course, many who can't make it to 20% down end up having to pay mortgage insurance or PMI each month. So I want you to look at these incomes. This is 80% of the area median income. If your household makes less than that, Frost has a mortgage product where they say you could get one of those lower than average rates and $4,000 off your closing costs, and you don't have to put any money down, and you don't have to pay mortgage insurance.
Take that mortgage insurance out of the equation, that can sometimes be $150, $200 a month.
Last year, the bank set a goal of making $500 million in Texas home loans. They shot past that goal, and this year they're aiming even higher.
Hopefully getting to about $850 million by the end of this year. And I think we're going to do it. Feel very confident.
Now, for perspective, that big number is really much smaller when you consider there was almost $114 billion in mortgages approved in Texas just in 2024. But this is still an ambitious beginning for a bank that has come off the sidelines. And they say their competitors have taken notice of their aggressive offerings, which could benefit you even if you don't end up getting a mortgage with Frost.
We have seen some lenders that have questioned, is it real? Is it true? Is this really what you're doing? I think the phrase is imitation is the highest form of flattery, right? So we're seeing folks that are looking at what we're doing and try to emulate that or mimic that. I think the difference is truly, this is our DNA. This is how we do things every single day.
Now, I know you may be interested in a lot more details on all of this, so I've got them in my article today posted at Jason Wheeler TV on Facebook, Threads, and Blue Sky to help you mortgage right on the money.